The US election. You think we'd all be used to it by now, but every 4 years we still get the popcorn out to watch the political circus unfold. The main event of 2024 is just around the corner, and whether you're a fan of Kamala Harris, Donald Trump, or just hoping the chaos doesn't completely tank your portfolio, you're probably wondering the same thing as me. How will this affect my investments? The main event of 2024 is just around the corner. We know one thing for sure. The US has a massive influence on global markets. Whether it's your humble S&P 500 index fund or a collection of international ETFs, the fate of your investment is more closely tied to American politics than most of us care to admit. And when you try to research to find out what's going on, it's either clickbait headlines making overblown claims or articles that are so complicated you would need a PhD to understand them. Let's break it down into an easy to understand format so you can be clued up on what's actually going on, what's at stake, and how this whole election can make us richer or make us not want to look at our investment accounts. And while we're at it, let's take a moment to enjoy the drama of it all. I mean, have you seen the things they've been saying about each other? Kamala calling Trump's policies medieval and looking like a malfunctioning robot when her autocue broke the other week. Obama is on stage quoting Eminem.
These weak arms of heaven.
While Trump is claiming that she's only in it to turn the White House into a Whole Foods, calling her Kamala Hammer while working at McDonald's, while in the meantime, Elon Musk is handing out $1 million per day to voters. It's like watching a really bad or entertaining episode of South Park, but with a lot more on the line than just bad jokes. And we thought we had it bad. So let's go behind the smoke and mirrors and look at what you should actually expect from each candidate and what impact it could have. Let's break it down. First, we've got Kamala. She could be on track to being the first female president in the United States, which would definitely be a positive for her with voters. But is this 4 more years of the same we've seen from Biden, or is it a fresh new take? What does Kamala actually stand for? Kamala Harris has been vocal about several policies that could directly impact the markets. She's very keen on pushing green energy, expanding social services, and reinforcing financial regulations. For starters, her renewable energy push could mean good things for green tech stocks. We could expect solar, wind, and electric vehicle-related companies to benefit. If you've got some investments in those sectors, keep an eye out because they'll likely do pretty well if she wins. And it'll likely have a negative effect on oil and gas stocks. Another big focus for Kamala is increasing corporation tax rates. She's looking to roll back some of the tax cuts from the Trump era, but as we know, higher taxes aren't always the stock market's best friend. It's the equivalent of getting a surprise bill just as you are planning on going on holiday. Corporate earnings could be affected, and as a result, we might see a bit of a hit on the broader market, especially if she starts targeting big players in tech. While more tax may be good for people in the economy, rightly or wrongly, the stock market is geared towards companies growing, and companies grow stronger in times of lower taxes. They've got more money to reinvest and grow, giving us better returns. She's proposing an increase in the rate from 21% to 28%. Higher corporation tax rates will cause some companies to relocate outside of the US to a more favourable tax environment. This is called tax inversion, and it tends to occur more often when the government raises corporation tax rates. Why? Because US companies compete on a global stage. So if taxes are too high in the US, they may decide to relocate to another country to lower the tax burden. Ireland is one popular choice with its 12.5% corporation tax rate. The argument, however, is a playoff between the fact that growing stocks gives people more money. Even if they aren't invested, it gives them more through their pensions. But in theory, getting taxes right could make day-to-day life better in the short run. Getting that line right is very difficult. She's also in favour of expanding healthcare access, which could lead to increased regulation in the pharmaceutical and healthcare industries. This might create growth for some healthcare stocks, but also opens up opportunities for companies that focused on cost-efficient solutions or generic drugs. This will likely create a lot of volatility in the healthcare sector. The Washington Post said that healthcare reform is a major aspect of the Harris agenda, focusing on reducing drug prices and expanding Medicare. What's also interesting in this situation is that Kamala has actually been the vice president for the past 4 years to Joe Biden, so we'll likely see more along the same lines. Although of course this couldn't be for certain. I do think, however, it depends on whether you think these people are the decision makers or it's the team behind the scenes. So what's happened under Biden? Well, over the last 4 years, we saw a steady but somewhat cautious growth in the S&P 500. From the start of his term in January 2021 to now, the S&P 500 has grown by approximately 44%, despite facing challenges such as inflation and supply chain disruptions. Yes, inflation was a major topic, thanks to the infamous supply chain issues we all got tired of hearing about. But overall, the markets didn't do too badly under the Biden administration. A lot of that more recent growth, though, could be credited to the rise in AI rather than specific political policies. For example, Nvidia is up over 200%, while Google and Microsoft have also seen significant gains, each rising by over 40% just this year alone. Kamala will be looking to build on that foundation, but whether investors will keep their faith remains to be seen. Historically, Democratic administrations have often led to decent returns for investors. If we look at the past, the stock market under their leaderships tends to lead to more stability, albeit sometimes slower growth compared to the Republicans who love their tax cuts. For example, under Obama, the S&P 500 rose approximately 181%, providing a significant boost to retirement portfolios along with long-term investments. This growth was largely attributed to the recovery following the 2008 financial crisis. So, what could we expect? If Kamala takes over, we could be looking at a more cautious market. Not too hot, not too cold. She'll probably focus on policies that promote sustainability and try to support the economy while maintaining a slightly heavier hand on regulation. This isn't necessarily a bad thing if you like long-term steady growth. Plus, the emphasis on renewable energy might set up a solid green rally. It's also worth noting that Harris has indicated support for stricter antitrust laws, especially concerning big tech. Antitrust laws are basically rules to keep big companies from getting too powerful. They make sure that no single company can dominate an industry. This means that we get more choices and fairer prices. For big tech, it means that companies like Amazon, Google, and Meta can't use their size to squash smaller competitors or control too much of the market. While this might cause short-term dips, it could also encourage more competition in the tech space, ultimately benefiting innovation and smaller tech firms. If you want to learn more about the differences between the two candidates, the sponsor of today's video, Saxo, is a really great place to look. What sets Saxo apart from the other platforms is just how detailed its research is, which is often where other platforms fall down. They've created a dedicated section to the US election and created an entire US election hub, so you can stay up to date with the latest news and be prepared for the impact of the US election. If you want some inspiration on which stocks might be affected depending on the election outcome, Saxo's experts have even put together a list of stocks to help you get started. Saxo is a very detailed platform, and they've also just launched their new user-friendly investor-focused platform, Saxo Investor, with over 71,000 investment products across 120 markets in just one place. You can invest in more than 11,000 stocks, ETFs and bonds and funds starting from just $1. They've given me a special link so you can open an account and receive up to $200 back on online trading fees. And they're also offering new clients an exclusive offer to trade up to 100 US stocks commission-free until the end of the year, to help investors navigate these turbulent times. So that's Kamala. What about Trump? Is he back for round 3? No, Trump. Love him or hate him, you can't deny that he knows how to make headlines. Trump is looking to make America, well, whatever version of great he has in mind this time round. He's all about tax cuts, deregulation, and promises of bringing jobs back to the US. Tax cuts are generally great for the stock market because, well, it means more profit for big companies, and investors like us love that. Trump has also talked about ramping up infrastructure spending. That's good news for construction, steel, and manufacturing sectors. The man knows how to make a spectacle. And if he manages to push through his agenda, we could see short-term rally in the markets, with investors cashing in on the hype. When it comes to global trade, Trump's first term sent shockwaves through the system. He pulled the US out of something called the Trans-Pacific Partnership Pact and imposed tariffs on China, which broke the World Trade Organization rules. The idea was to reduce the US budget deficit and bring manufacturing jobs back home. But China retaliated, and the outcome wasn't exactly what Trump had hoped for. Studies shown that up to 250,000 jobs were lost as a result, and US manufacturing employment fell by around 1.4%. Still, tariffs remain politically unpopular. Tariffs are basically taxes on goods coming into a country. They make foreign products more expensive, which in theory helps local companies by making their goods cheaper in comparison. But the downside is that tariffs can also make everyday items more expensive for consumers, which is why there's so much debate about them. Even Biden has increased some of them since he took office. Now, in the run-up to the 2024 election, Trump is promising to increase tariffs by another 10% on most foreign products, with some goods from China facing tariffs as high as 60%. He's also threatened 100% tariffs on countries that move away from using the dollar to trade, all in an effort to keep the dollar's dominance. Kamala Harris, meanwhile, has called out his tariff as an effective tax on American households, warning that they will push prices of goods up, increasing inflation. The Peterson Institute for International Economics estimates that if Trump's tariff threats come true, consumer prices could rise significantly, with inflation reaching between 6 and 9% by 2026, instead of falling to the current estimates of around 1.9%. Trade tariffs could also impact stock market returns. Tech is a major driver of the US market gains, but Trump's tariffs could have negative consequences on the tech sector, especially given their reliance on global supply chains. Although Trump prefers a hands-off approach to tech regulation, ongoing trade tensions could pose serious risks to companies like Nvidia, Apple, and Tesla, which are deeply connected to international markets. So in that sense, either side could pose threats to the tech industry, which makes up a large portion of the S&P 500. As far as the energy sector goes, a Trump win would likely be positive for traditional energy like oil and gas. His America First mantra means promoting energy independence, which could lead to more drilling projects and deregulation in oil, gas, and coal. While this could be great news for energy companies, an increase in supply might keep oil prices lower, especially if global tariffs end up slowing down the world economy. So, what happened last time? When Trump was in office, the S&P 500 had some wild swings. His policies gave the market a boost, especially the tax cuts, which were a hit with investors. But of course, 2020 brought the pandemic and the markets took a nosedive. However, the recovery post-crash was swift, partially driven by the stimulus packages and Trump's insistence on keeping the economy open. Historically, Republican administrations, especially under Trump, are more market-friendly. You've got lower taxes, less regulation, and more room for companies to make profits. The S&P 500 under Trump was a roller coaster, but the dips were followed with strong recoveries, leaving long-term investors pretty happy. According to data from Bloomberg, the S&P 500 gained roughly 67% during Trump's first term, despite the pandemic's significant impact on global markets. So what could we expect this time? Well, if Trump comes back, we can expect more volatility. He's likely to keep pushing for tax cuts, and that'll probably get the markets partying in the short term. But the long-term effects of deregulation might lead to a riskier economic environment. If you're a fan of big moves and the potential for fast profits, a Trump win might make your portfolio do some backflips. Just make sure you're buckled in. There's also the possibility that Trump's trade war could return. During his first term, tensions with China led to market uncertainty, particularly affecting sectors reliant on these global supply chains. Should Trump reignite these tensions, we could see increased volatility in industries such as tech, agriculture, and manufacturing. Saxo's take on Trump in office is there's a 45% chance of a Trump clean sweep. In this scenario, Trump wins both the House and the Senate and have Republican majorities. This scenario would likely lead to further tax cuts, although the US government debt situation is far worse than it was before Trump's 2017 tax cuts. Trump has also indicated that he will pursue deregulation across the board. On foreign policy, a Trump clean sweep is seen as providing less support for Ukraine. The tax cuts and likely increased spending might help the US economy avoid recession, but at the cost of new inflationary wave as the US debt situation worsens, but also because Trump has promised to deport millions of immigrants, which could tighten the labor market further. So how do we compare the two? What about the market performances under Harris versus Trump? Well, it's a tale of two different philosophies. Under Kamala, we're likely to see steady, less exciting growth. Under Trump, the market will be more of a thrill ride, bigger gains in good times, but more exposure to risk if things do go south. It's like choosing between a dependable car and a sports car that may or may not have brakes. Republicans tend to boost the market in the short term with tax cuts, but this can lead to budget deficit and potential instability down the line. Democrats focus on regulation stability, which might make the market grow slower, but it's more consistent. For example, data shows that the annual average return of the S&P 500 during Democratic administration elections has been slightly higher compared to the Republican ones over the last 70 years. More recently, we can see from this chart that since 1993, the market has grown better under the Democrats compared to the Republicans. But this does largely depend on global factors too, which can be outside of their control, i.e. wars, supply chains, and global tensions, which to some extent can be under their controls, but namely some things like the boom in AI and tech aren't so much under their control. It's just how things are evolving. So putting praise or blame on just one specifically can't be 100% true. The market's reaction to the election will largely depend on how investors feel about their policies, regardless of who ends up in the Oval Office. There will be market swings, some more dramatic than others. It's important to remember that elections tend to cause knee-jerk reactions in the market, but over the long term, things often level out. But what could the stock market look like in the next 4 years? Whether Kamala or Trump takes a win, there's one thing that we should keep in mind. Long-term investing isn't about timing the market, it's about time in the market. We may see some exciting gains or terrifying dips in the aftermath of the market, but averaging in and sticking with your strategy will probably keep you on the right track. If Harris wins, expect more support for ESG, environmental, social, and governance investments, which could mean a significant inflow of capital funds into companies focusing on sustainability. This could be a great opportunity for those already invested or those that are considering investing in the space. If Trump wins, then stocks that do well when the economy is expanding, like industrials and financials, could see a boost. The focus will likely be on immediate growth rather than long-term sustainability. This might provide opportunities for traders looking to capitalize on shorter-term trends, but it's crucial for us as investors to assess our portfolios based on the potential outcomes. Diversification is key. Having exposure to both growth-oriented and defensive sectors might help manage risk regardless of the election results. For the most part, though, we need to think about the impact on the global markets. It's not just the US market that will feel the ripples of the election. Global markets will also be watching closely. A Trump victory might lead to more aggressive America-first trade policies, potentially creating tension with key economic partners such as China and the European Union. This could negatively affect emerging markets, particularly those heavily reliant on exports to the US. For example, during Trump's previous term, his tariffs on Chinese goods led to a significant slowdown in Chinese manufacturing and distributed supply chains worldwide. If Kamala wins, global markets may react with cautious optimism, especially in sectors related to climate change and green energy. European markets, which are already leaning towards sustainability, could see more alignment with the US on green initiatives, potentially leading to joint ventures and shared technology. This would be beneficial for multinational corporations with a focus on renewables. But what are analysts predicting the outcome of this election to be? Well, analysts actually have mixed views on the outcome, surprise, surprise. According to Goldman Sachs, a Trump win could lead to a 5 to 10% rally in the short term, fueled by expectations of lower corporate taxes and deregulation. However, they caution that the risks of increased trade tensions and a lack of focus on climate policy could create instability in the longer term. On the other hand, analysts at Morgan Stanley suggest that Harris' victory could lead to more stability and a gradual increase in market growth. They note that her policies on healthcare and green energy and technology regulation could foster a more sustainable economic environment. However, they also warn that increased taxes may dampen profit margins for major corporations, which will dampen growth, which will slow growth, at least in the short term. So my view is, as entertaining as this all is to watch and keep up with, don't panic. Don't try and time the market. Keep averaging in and stick to your plan and ride the waves, because elections come and go, but our investment goals are way longer. And if there's one thing we can all learn from this whole mess, it's that the market will keep moving no matter who's in charge. Remember, it's not just about who's in the White House, but also the underlying economic fundamentals and global factors. I would emphasize now more than ever to think about how diverse your portfolio is. Are you all in the S&P 500 or more in a balanced global fund? I like to take the balanced approach, which you can see in my 2-fund Vanguard strategy, which you can see right here. If you want to see more about how to stay the course in times like this, make sure you subscribe and check out my other videos. And in the meantime, let's keep those investments going. Take advantage of market dips, even if we're all just trying to make sense of this political madhouse. I know I'll eagerly be awaiting the result of this election, that's for sure. Thanks.